Hi everyone and welcome for a new video. Today we're going to discuss one thing about the EMA that no one is telling you. First of all, what are the EMAs? EMA stands for Exponential Moving Average, and it's an indicator, kind of indicator. It's a lagging indicator that's usually used for defining what the price was on average on a long period of time. So let's say here we have 4 different EMAs, the 9, the 20, the 50 and the 200, those that I usually use. And each one has a period of 9, 20, 50, 200 candles that it takes into account in order to generate a value defined at the closing of the candle. That's the value of the EMA in that point. So the smaller the value of the number of samples for the average, which are these 9, 20, 50 and 200, the higher is the responsiveness of the EMA to the price action. And you can see it here clearly because we have, for example, here on Vine, VI and E, move higher, okay? And you can see that the 200 barely moves. It takes a lot of time to get to, let's say, $7.50, like at 11:52 a.m., whereas the same value is reached by the 50 EMA by 10:17 a.m., 10:07 a.m. for the 20, and 10:02 roughly for the 9 EMA. Then we have the orange line, which is view up. It's a different kind of indicator, so we won't talk about this in this video. What's the problem with the EMAs? As I said, they are a lagging indicator, and they often provide, they're very useful for trading, but they can be tricky, especially when you go backwards and try to backtest your strategy based on the chart. The key point, this is valid especially for the quick ones. So in this case, let's take as an example the 9, which is usually a quite quick EMA. Sometimes people use the 10, sometimes the 9, sometimes even shorter time period, but let's say 9 is pretty common. I would stick with it. And we can see that as it follows the price quite quickly, so as the price moves, it moves with it. It climbs up and provides some kind of, it shows some kind of feature here now that you may recognize on the chart and that you may have seen in many charts, especially when looking backwards and saying, okay, I have to figure out a way to identify entries for my trades. Where could be a good entry? You may be tricked to think that when the price gets close to the 9 EMA, like here, it may be a very good place for an entry. Let's take this one as an example. The value of the EMA at this candle here, you can see it, look at here, you can see it is 676. Okay, so this is the value of the EMA at this candle at 9:58 a.m. Okay, so clearly the fact that the next candle, the EMA at the next candle is basically at the price of the lower of these candles doesn't make any sense. For us, it's not a signal. It's something that happened in the past and we can no longer act on because right now the price is here. But most importantly, the value of 676 of the 9 EMA here was defined at the close of this candle. So when the price was already at $7.93, almost $1 above where they actually are closer. So what was the price of the EMA, the value of the EMA when this candle actually was here? A good estimate would be the value of the EMA at the previous candle, so 648. Because the price is almost there, so it's the close, and I mean, the close price of this candle is basically at 7, and it is also the open of the next candle. And you can see that we can then consider the price of the EMA when the price of this candle was at 7. The value of the EMA would have been roughly the same as it has here, so 647. And that's very far from it. So this wouldn't ever give you any chance to take a trade based on the position of the EMA. Okay? This is very important to understand, especially for beginners. For some people it may be obvious, it may be also considered maybe silly to consider this as an issue, but when you go backwards and you look at the charts, you may be tricked into believing that this is giving you the chance to define a setup, whereas it's not. This is not the right way to use the EMA. Let's go back now and let's see a few examples that will clarify better the situation. Here on VVOS, we can see situations which is similar to the one we were showing before. For example, on this area here, we can see that the price stays here for a bit. The value of the EMA at this candle is 237, okay? Then the price spikes up and it goes to 242. This is a stock with a very narrow range, so we're not talking about huge numbers, but clearly you could have entered with a higher size to compensate the small range at the same risk, let's say. The interesting thing is that you see that basically here the EMA is almost tapping the candle, the bottom of the candle, and same happens here in this area. But both of these situations, they are not giving any signal. On this candle here, for example, the EMA before the breakout, so before actually the candle moved up and closed higher, the value of the EMA was here at the bottom of this candle. This is where you can use the EMA as a reference for example, a good stop value or possibly an entry. But this is a flat bottom also, and it lasts for 4 minutes, and that's why the EMA was able to catch up here and actually tap the candle. But anyway, also on this candle here, the EMA value was here, so not exactly tapping the candle, was still below. The basic concept is that two things can happen. One thing that can happen is that the EMA moves towards the candle. In this case, clearly you have no chance to take a trade based on the fact that the EMA is tapping the candle, because this happens after the price has moved. And this is what happens here, what happens here. The other thing that can happen is that the price goes to the EMA, which is basically what happened here. But you can immediately see that this may not be a very good place for a trade, because first of all, you don't know if the price is going to stop there. Sometimes it does, sometimes it does not. There are a few ways to recognize how likely you are to get this kind of action. It's hard to tell based on the candle itself alone, but as the candle develops, it's quite easier to define whether it will succeed or fail. We have an example here where we can see that the candle opened here. This is a red candle, so this is the open. We don't know what happened. No, the candle may have gone downwards, then hit a high, then back to the low. No, and the shape would be the same. But considering what happened later, what we can assume is that the price went up with these nice higher lows. The price went up it failed to make a new high, it failed to continue, and it flushed it down because there was no sustain in the move. And so even if it tapped the 9 EMA, it got through in the next candle, it kind of recovered, but in this area it became a bit, the stock became a bit choppy, so not very easy to trade. The same thing about the Ema delay happens at every kind of time frames. Here we have IMTE on the daily chart. This is the daily chart of IMTE, and we can see that the same thing is valid here. You have this candle, okay, which is the green line is the value of the EMA at this candle here. The red line, okay, is where you would have seen basically the EMA after the closing of this candle. So it's basically impossible to look backwards or making a backtesting strategy, which implies that you should take a trade when the bottom of the candle is tapping the EMA. You would never get it in this kind of scenario during the trade. It won't happen. And this is tricky. You have to consider this. When can you take a trade based on the EMA? You can do it here. This is a good example. On this candle, we can see that we have higher lows for each of these candles. Okay, we have this pullback here. We don't make a new high on this candle. So basically the candle began here at the low of this candle, of the candle before it. It went higher a bit, didn't manage to actually print a higher value than this. It broke through the low, which is still a bit weaker, but it immediately recovered. So in this situation, you may get a chance to actually buy near the EMA. You can see how close the price of the candle got to the green line here, which is actually the real value of the EMA during the candle movement. So when the price was back here, this was the price of the EMA, the value of the EMA, and it got really, really close. So if you shifted a bit your entry towards the upside, let's say you had from 375, you were okay to buy at a dip at 380, or the high of this candle here, so let's say 383. This could have been a decent dip based on what? Based on the fact that you have the view up right below it at about this price here, 370. So your stop is close anyway. If you break through view up, you know that the stock is gonna have a bit of a harder time to catch up much higher. And still you get a lot of range upwards, and it starts basically the breakout on the next candle, and then you shoot higher to 467, which is a very good trade. So this is the right way where you can take a trade off the 9 EMA or a quick EMA, a fast EMA for that matter, no? But you have to make sure that you understand how the price moves and how you can identify the different situation, which is different from here to here. These are the two scenarios that we talked about. This is not feasible in real time. You will never get the chance to enter at this price on the EMA because or closer to the EMA here. The real value of the EMA was this 343. So again, the closest you would have had the chance to get was 353, 354. So it's quite far from it. It's 10 cents. So that's not something that is going to trigger your setup. Whereas here, given that it didn't make a new high, it went straight to the 9 EMA towards view up. You had the stop at view up. You could have taken an entry here, and aim for the breakout. This is called the bear trap. We're going to discuss them in another video. But that's it for today, and I hope it's clear and this was useful for you. Make sure to ask any questions you may have in the comments below, and clearly if you think these videos are useful, you can subscribe and put a like. I appreciate, and clearly it allows more people to see the video and maybe get something useful out of it. So with that said, thanks everyone, and see you, and bye bye.